Hey guys, welcome back to the show. Thank you for tuning in. As always, if you're new here, make sure to hit the subscribe button and do not miss out on any of the content. So in today's video, we're going to be speaking about the retail investor approach that you can take that will save you a lot of money and time and effort and nerves. So guys, without any further ado, let's get right into it. So the standard investor approach, as we know it, is to not buy when the prices are low, but instead to wait till we see the prices increase and the attention of the media focus on Bitcoin, for example. And this is when people start to get interested, and this is when people start to buy. Now obviously the problem with this is that you're actually left with two main scenarios that happen. First of all, your money is now locked up at a price which is not very favorable to you, and if you decide you want to re-enter at better prices because the market drops, you can't because you've already allocated your funds and they're locked up. Unless you want to make a loss and then re-buy again, going in with more risk, that's obviously not a very favorable scenario. The second thing is then obviously, because you're buying at higher prices, maybe the price goes up slightly, but the profit is not enough for you to sell. And so what happens as a result is the price drops. And unless you have the patience to ride out the wave until you're back in positive territory again, I would recommend that you do not buy at the high prices, because both situations are not very favorable and you have to be very patient to go through with it. One thing you can do, in my opinion, is to reverse the standard approach. So what you can do is you can go against this logic and buy at very low prices. Obviously the risk is high, but so will be your reward, which just means now that you're going against the public and you're buying at low rates. You're going for that high risk, but obviously you're going to have very, very high returns. Now obviously I don't always recommend this because it's not for the weak-hearted, but it is obviously one approach you can take that will obviously put you in a much better position in the long run. Now, the whole idea with Bitcoin and a lot of other cryptocurrencies and investment, let's say, models, is that people sell you the idea of getting rich fast, getting rich quick, fast, and building up your crazy empire in a very, very short amount of time. And obviously this is not real, guys. Don't fall for those traps. And obviously think about it this way, that you're meant to be investing over time and accumulating. So the main idea that retail investors should take, especially with cryptocurrencies, is accumulation. Bitcoin and all the other cryptocurrencies are a game of accumulation. Now what I mean here is that instead of going in at one price and all in, so let's say at $10,000 you buy 5 Bitcoin, instead of that, what you can do as well is to switch it around and start buying in at, let's say, $5,000, $7,000, $10,000, and $12,000. And this way you're basically spreading out the risk, which obviously will help you in the sense that now you can sell at different prices because you've bought at different prices. So now you've got that flexibility of re-entering the market, selling at higher prices, because you have the flexibility. And the whole idea of investing is to build your portfolio over time, let it steadily grow, and obviously make sure that you're buying over time and accumulating Bitcoin. That is the most important factor here, guys. Now, I hope this video has been useful to you guys. If it has, make sure to hit that like button. Make sure to subscribe as well. I know I'm sitting in the rain right now, but obviously it's not much, it's just pouring down a little bit. Anyways, guys, as always, stay safe, stay smart, stay humble, and take care.
That's me.